This is a video to get your bearings in an environment that is likely the toughest I've seen in 6+ years. So I say this because there are places, there are trends. And in the premium video, I'm going to dive into where some of the trends are and understanding some relative performance. But before we get there, we really have to have a baseline to understand what on earth is going on right now. And why does it seem that everything that works so well, not but 2 weeks ago, 3 weeks ago, has changed? And a lot of this has to do with two very easy to use tools. I'm going to start with the broader tool first. This is something everyone has access to, and that's the VIX. All right, this is actually the VX futures. Now remember, the VX futures are calibrated based on a 30-day SPX option. So remember, this is more S&P calibrated. And for the most part, for most of the year, and you can see I'm even going back into the very end of 2023, this was our range. Now, it would be helpful if, for the purposes of what we're talking about, ignore these prices, because frankly, they don't really matter. It's the range that matters. Think of it as high and low gear. When we saw all-time highs and a beautiful uptrend for most of Q1, right? Now here's our Q2. What do we have? Beautiful normal operating temperature until right in here. April 4. On April 4, we busted up through that. Now we had once before, and it lasted for one candle. Right in here. Lasted for one candle. We busted up through that operating range, that operating temperature, and then things normalized. So we had one day of, oh my gosh, and this was back on. And if you want, later on, go take a look at any chart in the S&P, NASDAQ, Dow, the daily. Take a look at stocks heavily weighted there, sectors heavily weighted there, and look what they did on the 13th. That was the first time we busted up through that. But look how quickly volatility contracted back to this nice operating temperature. Imagine having your house set at 70 degrees. Yeah, the AC sort of broke and the house got up to about 90 and then it got back down to 70. And remember, February was beautiful trend. March was a beautiful trend. And then we busted it again. And this was just very recently. This was only 12 calendar days ago. Why are we struggling? Why is price action as erratic as it is? Why are we reaching extremes in terms of highs and lows in a single session? Well, it started here. Once again, we busted up through. Now, normally we would expect exactly what happened in February. Just come right back down to the range. That's not what happened, is it? Spent another day above that high. Again, house to set to 70, now it's 90. Okay, well, it should cool off again. And it looked like it was going to, but it still lingered up in here. It still lingered up in this area. It didn't really quite cool off, right? The AC didn't kick back on and cool everything off again, did it? Kind of stayed up in here. And then, that was the 12th. That was April 12th. April 12th was last Friday. And April 12th not only shot back up through that high range, now it stayed up there. This is the house getting hot and staying hot. And sure, we have a little bit of a reprieve today, but again, it's way above what we have been expecting at normal operating temperature to be. That's why the markets feel the way they do right now. It's not that 18 in and of itself is high or low or anything. It's relative to what we've been used to. Now, you don't have to take my word for it. Let's go ahead and take a look at the S&P. This is why we say this. Now, why do we need to look at extremes? Because that's where, let's take those same two candles. There's a 13th. That was the first time we started to exceed the typical price movement ranges because we have to have a way to measure this. So on the 13th, right there, we went to the standard deviation to both the up and down side of the typical range. What does that mean? If 68% of the time we're expecting action to move a certain way, this exceeded that 68% probability. But then it normalized, and look how beautiful everything was after that. Everything got fine. One day. All right, well, we had that one day right here. And you can see standard deviations tested to both sides. But then what happened? We've persisted. We've persisted with that break above what was normal on the VIX. And look at how the daily price movement ranges have responded. Not only did that break the trend, that means we moved from a trending market to now chop, and it's still chop, by the way. Even though it's starting to get a little bearish as of Friday, it's still chop. This is Friday's candle right there. It's still chop, but look at how often we started to test the upper and lower extremes since we've been up above that normal operating temperature. It has, look at this, again and again and again. Is it because 18 or 19 is high? It's high relative to what we had been getting, right? So please don't look historically at the VIX and say, we're wrong. We've been at 22, 29, 32. It's what we're used to. So if we're dealing with a home that's usually at 60 degrees and it goes to 65, not a big deal. But if we're used to a home at 65 and it goes to 95, we notice. And that's exactly what's happened. We're used to a certain type of volatility range, and now we are quickly and rather violently exceeding that. And this is the outcome of that. And it's really important because if we don't have a way to measure this, VIX plus daily price movement range, if we don't have a way to measure this, we're gonna feel like, A, we don't know what we're doing, rather than the volatility creating a lot of chaos. And we don't know when things will normalize. Normal will look like more candles like on the 8th and the 9th. Normal will look like that. Today could have been arguably normal. But we need to string together more of these days and let the VIX come back down or establish a new normal range. We'll talk more about that because we're not nowhere near that yet. This is also a very recent phenomenon. So I don't want anyone thinking, well, gosh, I thought I knew what I was doing. I thought whatever I was doing wrong in Q1, this could keep working. It will once the volatility subsides. And this, again, is pretty recent. The 4th was the first time, the shot across the bow, if you will. And then Friday, which is just this candle here, was the day we started to really hyper accelerate into those high ranges. Let's wait to see if we can normalize like this for a few sessions. And if that's the case, we will start to see the VIX drop. So the whole purpose of my mentioning all this is to make sure people know, to make sure traders know, hey, you know what? What's going on and how do I measure it? This is what's going on and this is how you measure it. And when things start to normalize, we'll either end up with a new range, a new normal, or things will start to drop. And when they start to drop, we're going to notice price action behaves in a way that's inside its normal volatility. And normal volatility is how we can get our risk management to behave in a way that it isn't right now. This is how we can get trends to resume. So how do we manage the problem, right? We've talked about the problem it causes. We've talked about the extremes. How do we manage it? So this is the way I would manage it now. Shorten the time frame to say 1 hour short-term swings. And here's kind of the extreme example. If we persist in this area or continue to accelerate higher, sometimes we have to know when flat is a position. But we have to have it measured, not panic. But when is flat a position if we continue to accelerate? And if we start going from 18 and change to 19 to 20, it will make sense to just sort of say, you know what? It's okay to sit on the sidelines for now. It's okay to sit on the sidelines until we can establish a new range and a new normal. And that we'll know in the next couple of days. So that's the action, that's the course of action. The fix is either we see the market pull back to something normal, we shorten our time frames, or ultimately, we just let this thing do its thing without us joining it in the mosh pit. So again, this is probably the toughest market I've seen in 6 years. And compared to what we were seeing throughout the beginning part of the year, it's a distinctly different environment. All right? There's nothing wrong with your charts. There's probably nothing wrong with your system. Make sure you don't start doubting yourself when in reality, the market has changed its nature. All right? Hope this helps. We always want to calibrate to finding opportunity. And the first step is just understanding what the heck's going on. And this has been a recent shift. This is what's going on. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, Subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.